So it turns out that Cern Basher has an ability to create these amazing spreadsheets that turn into magic graphs and charts and all kinds of things that everybody seems to enjoy watching and looking at. I wish I had that magical ability because I can write the spreadsheets, but that part about turning them into magical charts, that's pretty incredible.
It is. It's quite a talent that I have that will soon be replaced by AI. So you won't need me very soon, Randy.
Man, maybe I could use AI even now to do it. I'm not sure.
You probably could.
So, all right. So yesterday that would have been Friday night is when that show would have appeared, and we'll put the card up for that later. We had you go through your expectations, projections, anticipations for the next couple of years with regard to Tesla. And then you promised me that if I would give you my numbers, my analysis, in fact, you even took some of my analysis as we talked, that you would go through and turn my thoughts into magical charts and graphs.
That's right. Yeah, the first part of the show was gathering your input. I didn't share in detail my thoughts, but we showed a little bit of the model structure.
Uh-huh.
So let's go through that in detail today.
Okay.
And let's talk about what I am calling TRKTVM. Do you know what that is?
There's an RK in there. I can kind of figure that part out. The rest of it, man.
Behold the Randy Kirk Tesla valuation model.
Okay. DTRK. I got it. Okay. Got it.
Okay.
Yep.
So once people see this model, they're going to want to get their RoboVan order in.
Yeah.
Not that that's possible yet, but yeah, this will probably cause a flood of calls, at least into Tesla, to order the RoboVan.
Okay. All right.
All right. Shall we begin?
We can.
All right. Here is the results from your model
All
with
right.
your inputs
Yep.
without any numbers. We're just going to do a visual first.
I see. Okay.
Okay.
Yeah.
This is, whoops, trying to advance the slides, technical difficulties. Here we go. This is the valuation of Tesla
Yeah.
out to 2027.
Got it. Okay.
The gray lines are Tesla's current revenue generating businesses, autos, energy, and services and other.
Got it.
Okay. The blue is Optimus, the red is Robotaxi, and a little sliver of Autobidder and AI inference,
Okay. All right.
which you and I didn't really discuss
Didn't
yesterday.
really
You're just
discuss.
accepting my numbers on that.
I accept your numbers.
Yeah, but they don't in this model don't really matter. So they're just there for a little splash of color.
Okay.
All right. Here's how it looks to 2030.
Uh-huh.
Do you see much of an auto company reflected in the valuation in this chart?
No, the auto company becomes de minimis.
De minimis,
De minimis.
yes.
Yes.
It's not de minimis in terms of its absolute value, but in
Oh,
terms of its relative value, it's pretty small. And here's how things look at 2035.
wow. Yeah.
Okay. So let's go through in some detail and talk about how we arrived at this. And then at the end, we're going to share precisely the present value of Tesla shares today based on your model.
Okay.
Okay. And we're going to see if your prediction for $3,000 a share is correct or even in the ballpark.
Okay.
Okay.
And that's real value as opposed to market value.
Correct.
Yes.
Yeah. Ideally, the market value and the real value or present value should be the same,
Ideally.
but not everybody has the same expectations that we do. So therefore, there's a
They're
difference.
just not as smart.
They just haven't woken up yet, Randy.
Cern, it's really just a matter of an information differential. Yes.
That's right. All right, let's start with this. This is your projections for Tesla's auto business.
Okay.
Okay, so we're starting at about 1.8 million this year and building up to 2.6 next year, 4 million vehicles delivered in 2026, 5 million and going beyond. You had me grow this out 20% per year. So by 2035, Tesla's producing about 21.5 million vehicles.
Okay. All right.
Or
So
delivering.
it took them 5 years longer than the original projection. Okay.
Yeah. Okay. And the average selling price we have there, you accepted the numbers that I had.
Yes.
And then you have net profit margins that you wanted to assume of 12%.
Yes.
Okay. So that gets you to profit this year of about 9 billion, net profit, 9 billion, and growing up to about 80 billion by 2035.
Okay.
Okay.
Yep. Yep.
Now, one way we can approach this valuation is to assign a PE ratio to each year's earnings. So let's say, for example, next year, we assign a PE ratio of 50 to the 13 billion in earnings.
Okay.
I'll just use my mouse and kind of highlight that on the screen right here. 13 billion times 50 gets you to a valuation of $640 billion just on the auto business.
No, I got you. Okay.
Okay. And again, this is autos. This could include, certainly in the future, other things that would be in autos like semi-production,
Sure.
fiber cab, other new models that may eventually come out.
Right.
Okay.
So around $200 a share of the would be in autos only.
Correct.
Okay.
Yeah. And we'll get to the present value of all this in a minute, but just in future value,
Right.
640 billion on up to about 1.2 trillion by 2035, just
Okay.
for autos.
Okay.
Okay. All right. Here's energy. I believe you accepted my storage deployed numbers of 75 gigawatt hours next year up to 3 terawatt hours by 2035.
Yep.
And the average selling price, I think we started at 300 and we dropped that down to $150 per kilowatt hour. So therefore, the revenue then falls out. We've got about 9 billion in revenue this year, growing up to about 450 billion by 2035.
Sounds right.
You had me use 15% for profit margins. So therefore, then this is our net profit of $1 billion, growing up to about 68 billion.
68 billion in profit. Yeah, that's good.
Yeah.
Yeah. Yeah.
And by contrast, autos was 80 billion by 2035. So these two businesses are pretty comparable in terms of size, in terms of profitability by 2035.
Yeah, and I often use a shortcut of how many apples. So Apple is about 100 billion in profits. So this would be 68% of an apple.
There you go. A
2035.
pretty good bite of the apple.
Yeah.
Maybe a couple of bites of the apple.
Yeah.
All right. So that gets us to a share price today of $81 just on energy,
Okay.
growing up to, sorry, not $81, 81 billion. This is not per share.
Right.
81 billion, growing up to 1.35 trillion by 2035.
Okay.
Okay. Look good?
Yep. Yep.
All right. Here's your services and other assumptions. You had me grow this at 50%.
Right.
So it actually was kind of interesting because it results in revenue by 2035 of more than autos. So you've got 908 billion of revenue in 2035.
Okay.
Because the 50% growth compounded for 10, 11 years gets you to a big number.
Yeah.
By the way, your auto revenue in the same year is 667 billion. So this is a big business. Now I know that you factored in insurance. This also includes supercharging, used car sales, maintenance and service revenue.
And a big one that it includes is energy arbitrage and energy retail and wholesale.
Okay. All right.
So there's massive potential. I mean, that might be the biggest business other than Optimus. It might actually be bigger than Robotaxi. Will be eventually, as they add more and more wholesale, retail, and arbitrage, it could be, a percentage of all the energy in the world would be a big number.
So as I was building this, I was thinking, Randy's crazy. Randy's crazy. But if you include that, you're not so crazy because I didn't include that in my model.
Okay.
Yeah. I was even tempted to not accept your 50% and knock this down to 40% growth. But I decided that if you were going to blow yourself up on live TV, that I'd let you do it.
Well, at least I had an answer. Now, of course, all of this is such speculation that it's beyond hope. Actually, the interesting thing is that I think on Robotaxi and Optimus, the out year speculation is probably smarter than the close year speculation.
Could be.
Yep.
Yeah, it's absolutely it's speculation, but it's also provides a structure with which to speculate.
Right.
Right. And that's what I'm sort of showing here. It's not these numbers and these absolute results. These aren't predictions. These are just illustrations. And I think it helps gain a better understanding of the value drivers of the business,
Right.
depending on your assumptions. So services and other, you had the profitability growing from, an assumed 1% net margin today up to about 15%.
Mhm.
And now I understand why it's so high because you're including in that energy component.
Mhm.
Net profits basically, 0 today up to 136 billion. And then the value of this business, 6 billion today up to about 2 trillion.
Yeah. So that would be a 1.5, 1.3 apples.
A big apple.
Yeah. A big apple.
Yep. Okay. So put all three of these together, and this is looking at revenue. And so you've got revenues growing from about 95, 100 billion-ish today
Hmm.
on up to about 2 trillion in revenue by 2035.
Okay. Not counting Robotaxi and Optimus.
Correct. And
Right.
here's how that looks visually.
Okay.
And so you can see here that your revenue and the services and other is the biggest component of the business versus autos and energy.
Well, I bet you nobody else thinks that.
I think you are unique, Randy. But it is a promising business opportunity. Absolutely.
Right.
Yep. All right. So now let's look at share price. Since we assigned a PE ratio to each of these three businesses, we calculated the market value for the entire company if we just add up the three components. That's this column here that shows total.
Mhm.
Okay, so we get a business today that's worth, on these three businesses alone, based on your projections and your assumptions, a $632 billion business today, growing to 4.5 trillion by 2035.
Okay.
Okay. In terms of share price, that is $180 a share today,
Okay.
just for the value of those three businesses. And remember, Tesla is more than that. But today, we're just looking at those three revenue generating businesses, and that's based on 3.5 billion shares. And I increased the share count by 2.25% per year.
Okay.
So by 2035, you're up to 4.5 billion shares. And therefore, the share price is $1,000 per share
In 2035.
in
Okay.
2035.
Just for those those three components.
Yeah.
And by the way, interestingly, the $185 probably wouldn't be that far off from some of the analysts who break it down.
Right. If you're just considering the
Right.
existing business lines
Right.
today.
Right.
That's right. And many of them do. Many of them completely ignore Robotaxi and Optimus and everything else.
Right.
Yeah. Now, just as a quick aside, think about what happens here over time if Tesla starts buying back shares, then you don't have this dilution that's occurring,
Yeah,
right? And I haven't factored that in, but at some point they're going to start piling up some cash,
absolutely.
right? And so, just keep that in the back of mind. If you were dividing this by 3.5 billion instead of 4.5 billion, the
Right.
share price in the future is suddenly a lot higher.
Right. Right.
Okay.
But again, that's only for these three businesses.
Only those three businesses. All right, visually it looks like this. This is the business value stacked side by side. You can see your services and other becoming the largest value driver of these three businesses with Tesla by
Right.
2035.
Mhm.
And then you put them on top of each other, you get to 4.5 billion by 2035. Okay, so that's a beautiful chart just by itself. But we know that there's some other things coming down the pipe, right? Not
Yep.
just autos and energy and services and other. There's some new business lines that Tesla's working on. You might have heard of one. It's called Robotaxi.
Yeah. Yeah. In the back of my mind.
Yeah. So these actually are your numbers.
Okay.
You kindly shared with me your expectations for Robotaxi. And perhaps just take a minute or two and just share with us your thoughts behind this.
Oh, okay. So basically, the number of there's two kinds of robotaxis. There's the robotaxis that are owned by others, and then there's Tesla owned. So owned by others would include you and me putting our units out for sale, as well as people like Hertz or others that might have fleets. of greater than my one. They would have fleets of hundreds or thousands. So all of that would be one component, and the other component would be the Tesla-owned fleets. The Tesla-owned fleets I would expect to be everywhere except for third world nations. I think in third world nations, Tesla will not probably put out much of their own fleet, but will rely on others in India and China, et cetera. And also, I've separated out China because in China, I think that the fleet, the other owned by others fleets will not give anywhere close to the revenue to Tesla that the revenues will be in Europe, Australia, the United States, other first world nations. And that's, primarily because they can't charge anywhere close to the amount per mile in those countries as we can in first world countries. So that's how it's all divided out. I'm assuming about a 5% of consumers will put their cars out, but I assume there will be very large fleet businesses from others. I also assume that Tesla will go a little slow in terms of putting out their own deployed numbers. I've got 50,000 for next year, and then 100,000, then 200,000, as you can see. And those numbers will continue to grow. But I could be completely wrong in that. Tesla might choose to put out massive amounts of cybercabs. And so that could be that's the one place where I think I could be extremely wrong, would be how many Tesla actually deploys.
This column here.
Yep.
Okay. All right. Thank you for that. I could critique this, but for now, I'll just accept your inputs.
And by the way, my ending number, I realized when I got it all done yesterday, my ending number in terms of total deployments of unit cabs overall would be much lower than Kathy, much lower than yours, I believe. And so I might be off by a bunch based on this analysis.
Yeah, there's that. And I also think that your profitability per vehicle is pretty low too.
Oh, okay. And by the way, I cut that in half compared to my actual.
Okay.
So my actual valuation on the profit for Tesla is half of what my analysis shows me, because I'm figuring that we really don't know.
Yeah. No, it does remain to be seen. And it's different too in the near term versus longer term.
Yes, yes.
If we're looking at 2035, maybe. In the near term, it'll be higher, but yeah. Okay, so I took these numbers and put them in the model.
Right.
So EV sold here. Sorry, this is from your auto model, but here's your fleet size from your spreadsheet here in orange.
Okay.
Okay. And took your profit numbers. And if I apply, initially 100 PE ratio to that because it's a new business getting off the ground, it's highly profitable, high growth, 100 PE, no problem. You get to an initial value at say 125 billion, and then a $10.5 trillion market cap by 2035.
Okay. And Kathy is expecting it to be about 7 trillion by 2029.
Okay, you're about half that.
Right. In 2035. In 2029, you mean. Okay.
2029.
All right.
Yeah. You're about 3.4 trillion.
Okay.
So what's 3.6 trillion between friends, Randy?
Right.
All right. So that's Robotaxi. Now let's look at Optimus. If I'm not mistaken, I believe you just decided to accept my numbers, although you took off the 2025 numbers that I had of 1,000 or 10,000 Optimus or something like that.
Right.
Which is fine. That doesn't really influence anything. But you've got Optimus cumulative bots deployed of 208 million by 2035.
Mm-hmm.
And each bot is making $10,000 a year in net profit. So it's $2 trillion of profit with a PE of 50 is a $100 trillion business.
Right. And of course, in the early days, I think I was the first one to estimate 60,000 a year on a rental. So I think that's what it'll be. If Elon decides to maximize profits in an NVIDIA kind of way that you and I discussed the other day, I think it'll be at least 60,000 a year profit per bot. And that might go out for 5, 6, 7 years, but eventually that will, I think, start to be impacted by not being able to charge as much for home use as you can for industrial use.
So a $10,000 profit assumption here then is a heavily sandbagged number in your opinion.
Heavily sandbagged, yes.
Okay. And also before anybody says, well, these kinds of bot production numbers are crazy, consider this, so here's bot deployments versus auto deliveries as a comparison, right? So by 2035, you've got 21 million vehicles being delivered. That's the green bar.
Right.
And we've got 50 million bots. And so on one level, that's like, how's that even possible? But when you consider that probably Tesla can make 20 bots for every car,
Right.
21 million cars, right? And the bot equivalent of that in cars is 3 million or something like that. Right? It's for every car you make 20 bots, right? So in car equivalents, the 50 million bots
Nice. It would only be 3 million cars. Yeah.
Yeah. Right.
Yeah. Got it.
So, and it grows so the bot production in car equivalents is only about 12% of the production.
And Jeff Lutz and I have talked a little bit about this because he knows something about building things that are electronic in nature. And we just talked about it, in fact, on Wednesday night. And he says that he thinks that it'll be way easier to scale up than a car, but that there's a lot of density in terms of the complexity. So you have much smaller, much easier to build, but much more complex and on a density basis, but not as complex as, say, a phone.
Yep.
So you've got phones that we're making. I forget what Apple makes now, but it's a lot per year.
Yeah, I think it's maybe in the order of a couple 100 million phones a year, isn't it?
I think so, at least not maybe 90 million comes. 90 million sticks in my head somewhere, but
yeah, it's a large number, whatever it is.
Yeah, so it's not there. I don't think there's any number on the bots that would be absolutely crazy because it's just a matter of how many factories you build once you know how to build it.
Yeah, the ultimately the limit based on the research I've done is not your ability to make it, it's just the market demand. The businesses will scale up to whatever demand is there.
Exactly.
Yeah. Okay, so I think these bot numbers are reasonable in terms of, can they do it? Can they move the metal and the materials? The answer ultimately is yes.
Yes.
Right. All right, so here's putting everything together.
Okay.
Okay, and we are assigning 100% probability to each of your lines of business.
Okay.
Okay, so when we do that, we get to a market cap, the column in blue, by 2030 of $120 trillion.
120 trillion by 2030.
Yeah. Sorry, 2035.
2035.
2035, 120 trillion. By 2030, it's 35 trillion.
Okay.
Okay, so if we go down the list here, it's 656 billion today. Next year, it's $1 trillion. In 2026, it's 1.8 trillion.
Got it.
And then growing.
These are market caps.
These are market values based on the PEs that we assign for each business each year.
Okay.
And just build them up, add them up over time.
Okay.
Now, I should mention that this is one approach to valuing a company is just consider the earnings each year, apply a PE to it, and come up with a market value.
Right.
Okay, it's kind of like a Wall Street way of thinking where it's like, okay, what's the company going to do this year? What PE am I going to apply to those earnings? Boom, I've got my my target price.
Right.
In reality, what you want to do actually is a discounted cash flow analysis, and we're going to do that in a second.
Right.
So we're showing one way right now, and I'll show you the other way in a minute.
And then that would give us, you said, a share price then of all of these businesses currently being worth about, you're still only at $200 or 187.
Hold that thought.
Okay.
So this is a share price in 2030, a future share price of almost $9,000.
Okay.
And in 2035, $27,000 a share.
Okay. All right.
Okay. Not discounted. This is the future price at that point.
Right.
Okay. So let's just explore this visually first, and we'll kind of dig into it. Here's how it looks in terms of the value. Okay. So by 2035, if you take your three businesses that we had, autos, energy, and services and other, add an auto bidder and Robotaxi, you get to a $14+ trillion business by 2035.
Mm-hmm.
Okay. Layer on top of that Optimus,
Right.
and suddenly everything else looks tiny.
Yeah. Yeah.
Optimus is the value driver for
Yeah.
Tesla for the next decade.
And
Yeah,
beyond.
and beyond. Okay. Based on your assumptions, Robotaxi doesn't really even matter,
Yeah. Yeah.
right? Nice. I mean,
And actually, based on Elon's statement that I think he also roughly agreed with Kathy, but thought that that Optimus was worth 25 trillion compared to 5 trillion, I think, for Robotaxi.
yeah. And if we look back, and I'm not sure what time frame that was, if you say it's 2030, you've got a business value here of about maybe 35 trillion
Right.
in 2030. And, your Robotaxi numbers are probably less than 5 trillion.
Mm-hmm.
Actually, we can probably see that back here. You don't hit 5 trillion. Well, you've got 4.5 trillion for Robotaxi by 2030.
Okay. I'm good with that.
Yeah. And Optimus at 28 trillion. So you're in the ballpark of that 5 and 25.
Okay.
Yeah. All right. And then here's as a percentage of the business value, the transition, right? What percent of the business is made up by these different business
Mm-hmm.
lines?
Mm-hmm.
You can clearly see the transition from auto company to the AI-powered robot company,
Yeah. Yeah.
right? And, another business, the Robotaxi wedged in the middle where it's kind of relevant, but it's not.
Right.
All right. So here's those share prices going out into the future. Again, just looking at the earnings each year and applying a PE multiple to them.
Mm-hmm.
Here's a potential pathway for the future share price.
Got it.
But this is not the present value. This is not the value of this money today. So if we discount it using a 12% discount rate,
Okay.
the value of Tesla's earnings per your model gets you to a present value today of $4,400.
Okay. 4,400. And what was your number?
Um, Good question. I don't have that on top of my mind because I've been working with your numbers.
Yeah. I want to
Um,
I want to say yours was like 2008 or so, but I could be wrong.
no, I think mine are higher than
Or
yours by
higher than,
just a smidge.
okay. All right.
Yeah.
Well, all right. But
Okay. And then your 2035 number of almost 8,000 a share, present value discounted by 12%.
I see. Okay.
Now, my numbers are a little different than yours because I have some different assumptions. My
Oh, yeah.
discount rate was also 14%, not 12.
Right.
But I had higher expectations for Robotaxi than you.
Right. Right.
So we're actually probably pretty close,
Mm-hmm.
given all that. Okay. All right. Let's look at the other way of valuing Tesla. Actually, I think a better method,
Okay.
but this has its issues too.
Okay.
If we build up our earnings expectations, we can discount these earnings each year back to the present. So instead of just looking at 2030 earnings and applying a PE and creating a target just on 1 year's earnings,
Right.
let's look at all of the years
Mm-hmm.
and discount them all back to the present. Okay. Now, the challenge with this approach, and we talked about this in our last show, is how do we deal with the terminal value,
Right.
the earnings beyond 2035,
Right.
right? Because we don't think Tesla's just going to be around 11 years. It's going to be
No.
around for a good long time, right? And if they're earning $549 a share in 2035, then what's the earnings in 36 and 37 and 38, 39? Well, that becomes too difficult to forecast year by year. These years are hard to forecast.
Right. Right.
So you have to create some terminal value, right? And to do that, you apply a little bit of a shortcut. You take the 2035 earnings and apply a PE multiple to it.
Mm-hmm.
Okay. Now, you said that you thought the terminal growth would be 10% beyond 2035.
Right.
Okay.
Mostly because of the law of large numbers.
Yes. In my model, I assumed that the growth rate is the PE. So if you have a 10% growth rate, then your terminal PE is only 10.
Okay.
So in other words, your PE to growth rate is only 1.
Right. Right.
Okay. So we get this. We get the present value of your terminal value is something like $1,600 a share.
Mm-hmm.
Okay. And then here's the present value of all the other years. And so you can see the terminal value in present value terms is the largest component of your
Right.
number. And it's amazing, Randy, because you came up with 69%. The terminal value of your Tesla model here is 69% of the total present value of the company.
There you go. Once again, the famous
Once again,
reappears.
yeah. And what is also interesting, and we've talked about this before, 2025 earnings accounts for 0.2% of your valuation of Tesla. So let me repeat, what Tesla does for autos next year does not matter.
Matter. Yes.
Right?
What they do for energy does not matter.
No. Other than you have to have growth in 25 in order to have growth in 26. This does build on itself.
Yeah. So
it matters in that sense.
So Cern, see if you think that the statement I've been making for, I don't know, for the last 12 months might resonate with you. I hope it resonates with some in the audience, is that if you believe the story, and the story is that Optimus is going to work, it's going to be a thing, that it will replace human labor pretty much across the board at some point, that it will be, in addition, everybody will have one in their home. If you believe that story, and then maybe throw in, you believe the Robotaxi story too, that it really is inconsequential what else you believe. And if you believe that story, then you probably should be all in on Tesla, and you should probably be trying to scrape together all the money you can to get more money in on Tesla.
Well, I can't provide financial advice here. But, that statement that you said is quite interesting if you think about it.
Yeah.
Right. Okay. So if we take all these earnings, including the terminal value, discount that back to the present at 12%, we're going to get a present value of Tesla on a per share basis.
Right.
You suggested that your present value number would be $3,000.
Right.
Based on what you've seen so far today, would you like to revise that number?
No, I have no idea at this point. My brain is unable to encapsulate all that I've just seen.
That's shocking, because usually you're amazingly capable at this. All right, Randy, I'm not going to delay this any longer, but your present value of the Randy Kirk Tesla valuation model is,
right.
drum roll, please.
Yes.
$2,280.
All right. Well, I was in the ballpark. I wasn't radically off.
Yeah. And again, this is 100% probability to each of your
right.
Lines of business. That's pretty good. By the way, the present value of my model, I remember, was 3,450.
3,450. Okay. 3,450. And yours was also assuming 100% probability?
Yes.
Okay.
Because I believe my own numbers.
And so, yes. So again, a person who's looking at this more realistically might assign different probabilities. So
yes. And so to that point,
yeah, go ahead.
If you compare your model, the Randy Kirk Tesla valuation model,
right,
to the current share price, in order to get the current share price of, let's say, $313, otherwise see today it's like 323,
right,
but in that range, you would assume 100% of what you assume for autos and energy, but only 35% for services.
Okay.
Nothing for Robotaxi and only 5% for Optimus, and it gets you to the current share price.
Okay. Yeah. Okay. Yeah. What I was going to say is I was going to kind of take a different approach and say, if my $2,400 number is almost 100%, 90 whatever percent of it is Optimus and Robotaxi, then you could take, say, 50% of my number. You could say, well, maybe there's only a 50% chance of Robotaxi and Optimus happening. Then you might get still down to a 1,200, which would give about an $800, $900 worth of value to the optionality.
Yeah. There's an infinite number of ways of equating what you did to the current share price.
Yes.
But here are your building blocks. It's $102 for
Right.
autos.
Right.
So multiply that by 100%, well, it's 102. Multiply it by 50%, now it's $51.
Yeah.
So where does the rest of the value come from to get to today's share price? You can just kind of work your way through here,
Sure.
right? You could argue that it's a certain percentage of Optimus and you're getting the rest of the businesses for free.
Yeah. Right. Right.
However you wanted to think about
Yes.
that would
Yes.
be fine.
Yes. And sometimes in conglomerates, that's how it's looked at.
Yeah.
Like this is the portion that is actually in the stock market, and all the rest of it's just icing on the cake.
And that's why we've seen in history, past history, that a lot of conglomerates split up because they determined that shareholders are not giving them the benefit of these other businesses.
Yep.
And at some point, AutoBidder and AI Inference may feel like that, that long lost, sibling,
Exactly.
not
Exactly.
getting any benefit of the value. So that's kind of interesting in terms of you can use your model now to equate things to the current share price or other people's share prices.
Yeah.
You could put somebody's, $400 target in here and see based on the Randy Kirk model assumptions where they are relative to that,
Exactly.
right? And so here it is relative to my model, which I'm calling full CERN,
Yes.
3405. Sorry, there's my number, 3405.
hmm
So your model, Randy, how many Randy models do we need to get to the full CERN? We need to assume that your auto number is 140%
Uh-huh.
versus what you had, or
Okay.
40% higher.
Okay.
Okay, 24% higher in energy, but only 12% of your service and other,
Yeah. Yeah.
right? You've got a number that was way higher than mine. Okay. But my Optimus number is, 14 times more than yours,
Right.
right? My conservative, by the way,
Yes. Yeah.
Optimus number.
Yes. Yes. Your conservative number. Yes. As well as my conservative number.
I'm sorry, I misspoke. That's Robotaxi. I
Oh, Robotaxi.
apologize.
Oh, yes. Your number is, yeah, your number on that one's much higher than mine.
Sorry, I misspoke. Robotaxi, my conservative Robotaxi number is 14 times yours. My Optimus number is only 30% higher.
Aha. Okay.
You look at these numbers long enough, Randy, you start to, they all blend together.
Believe me.
Anyway, so this is kind of one methodology that you can use, and I think this is a better one in terms of it's encapsulating the present value of these businesses over a fairly long period of time.
Yeah.
It's not just looking at my earnings expectations for 25 and 26 and maybe 2027 or some number plucked out of the air in 2030 or 2035. It's looking at all those years
Yep.
and discounting it back. And one of the things that you'll learn when you do this kind of approach is that if Optimus or Robotaxi is delayed by a year or two,
Yeah.
it doesn't make a whole lot of difference,
Yeah. Yeah. Yeah.
right? And yet we all fret over that.
Well, I think we fret over it. I keep on using the baseball team analogy. I know, Cern, that, for you, it might have been soccer, but I think that a lot of the energy that I put into daily analysis has to do with just loving to watch how my team is doing.
Yeah.
And so, you could use all that same statements about, well, if my team loses today, if I'm in baseball and I got 164 games a season, if that's the right number, I can't remember. I think it's right. If you got 164 games, losing one game is not really going to have much of an impact. But on that day, it might have felt really bad.
True. And Randy, in the spirit of sportsmanship,
Okay.
your $3,000 present value number,
Yes.
I found out a way to get you there.
Oh, you did? Okay. All right.
Yeah. Instead of using a PE ratio of just 10 on the terminal value,
Oh,
I use 15.
oh, just by doing that.
And your present value today of Tesla shares using your model, using a terminal PE of 15, $3,069.
But there's no 42 in that number.
No 42. And I was just trying to get to 3,000. The 69 was a bonus.
Yes, yes. The 69 was a bonus. Okay.
I didn't force that. That fell right out of the model, Randy.
And so that would mean a 15% per year continued growth as opposed to a 10% per year continued.
No, it's still 10% growth, but I'm using a PE ratio of 15 instead of 10.
I see. Got it.
So instead of saying that the PE is the same as the growth rate, I said, well, the PE is higher because of, the profitability of the company, the financial strength of the company, maybe the fact that they're, buying back shares.
Macro, who knows? Yeah.
Yeah.
Okay.
Because a PE of 10 just feels too low for me at that point.
And to your point, the amount of money that the company will be throwing off, but the free cash flow, maybe you should do a free cash flow analysis on these, because the free cash flow that'll be throwing off, it may be able to buy itself, it may be able to buy back the shares, in no time.
Well, it's not only reducing the dilution. So we assumed the share count would increase by 2.25% per year.
Right.
It's not only making that zero, which we saw earlier would make a big difference,
Right.
but potentially reducing the share count over time.
Right.
Right. And if you do that, then these numbers look a lot different, a lot higher.
Real high. Yes. Yes.
Right. For now, I'm just assuming that earnings equal free cash flow, and I'm not considering what is done with the free cash.
Yeah, and the free cash could be handed out in dividends instead of share buyback. So, and
Yep.
I'm sure that a lot of us would be perfectly happy to receive those dividends.
Right. And that'll be the problem or the challenge that the company will have over time, just much in the way that Apple has generated so much cash.
Yes.
And they've, dividends and share buybacks has been a big component for them.
Right. Right.
And that's when a guy like Warren Buffett gets excited about it.
Yes. Yes.
Right. When that happens. Now, I think for Tesla, we're a little ways away from that. But once the Optimus program really starts to accelerate, that's when the share buyback discussion really comes into focus.
Exactly. Exactly.
Yep. So, Randy, I think you built a great model.
Well, thank you very much. I appreciate you making it colorful and attractive, and designing the concept in the first place.
You're welcome. And I think the Randy Kirk Tesla valuation model will be something that people reference for a long time to come.
Or the Cern Basher model, or the combination of the two. Maybe there's
I think yours is better than mine. Your present value of 3069 is way better than my 3405.
Well, and maybe there's a whole thing where we could get, all of the different co-hosts, and, and the ones from Herbert's channel and from First Odds channel. We could get everybody to do one of these analyses, and then we could lump them all together, and we could come out with a combined. So how many sleepless nights do you want to have, Cern? I mean,
no sleep last night. So, what's another few more for the cause, Randy? I'm happy to do it.
All right. Well, I know we're up against a hard break, and I didn't see any kind of a closing picture of any Cybertrucks. So
no, but I've got the shirt on today.
The shirt. All right. There had to be something. There had to be a Cybertruck moment. I will remind people to buy their Cybertruck for Christmas, because, I mean, what else? I mean, can you possibly think of a better gift?
And it was interesting yesterday, Dr. Jack on X.
Yes.
Posted, asked when he should buy a Cybertruck, when was a good time. And I wrote today.
Today. Yes.
And last night he posted that he's ordered a Cybertruck.
Oh, there you go.
So the influence that I have is just astounding at this point.
That's why they call us influencers. I mean, come on.
I suppose so.
It's absolutely true. All right. Well, I'm putting that card up right here for part one of this amazing analysis. I'm sure everybody that's watched part two will now be totally interested in going back and seeing how Cern Basher did his original analysis to where we got to this analysis.
Yeah, and I would add that if we get some good feedback or questions, I'm happy to present those, different scenarios as well. If anybody has, any materially different scenarios they want us to run, put it down in the comments, let us know, and we'll run some of those numbers and share them next time we get together.
Okay, you just have Grok do this for you, right?
No, but I should.
Yeah, you should. Yeah. All right. Well, on that note, it has been great talking to all of you, and thank you, Cern Basher, as always.
Thanks, Randy.